So in financial year 2024 and 2025, HMRC is serious. They are coming for you. I'm not joking. Like they are literally taking this seriously for e-commerce sellers, especially somebody who is making money online. They are coming for you. There are big changes. I'm gonna explain everything step by step in this video, and trust me, I promise you, you don't have to be a qualified accountant to understand everything, because I'm gonna break it down simply in a human language, the way I understand everything. And if I can understand without having a qualification like in bookkeeping and accounting, obviously I will make it simple enough for you to understand as well. But just as a disclaimer, I'm not a qualified accountant. Everything which I'm gonna say in this video is my personal knowledge, and when it comes to taxes, HMRC, bookkeeping, all that kind of stuff as well, you should get in touch with someone who is more reliable. For example, Osome. Osome is an accounting and bookkeeping services specially designed for e-commerce sellers, and I'm gonna put the link for them inside the description. They can help you to register a company, they can help you to file your tax return, everything got to do with the bookkeeping, and they are specialized when it comes to e-commerce sellers as well. So I'm going to put the link for them inside the description. Thank you so much for sponsoring this video. So let me tell you what changes are happening in 2024 and 2025 and what you can do about it. So the first of all, the big change is HMRC is not only relying on the information that you tell them in your tax returns. They are getting the information from eBay and Amazon, Uber, everything. They're asking them to report the income that we are making as well. So this is something that we have to be careful about, because before, some people, they could just, report a wrong income as well, just to save the money on the taxes. So if eBay and Amazon is telling them how much this person is making, and at the end of the year, I'm going to explain everything, how it works at the end of the year and financial year, everything. But at the end of the year, the income that we're going to report it to them is different from what eBay and Amazon have reported it to them. Then obviously we're going to be in a trouble. So the tax is more digital. They are not only relying on our word of mouth. They are asking and getting data directly from eBay and Amazon as well. So that's probably the reason you recently have received an email or message from eBay and Amazon to update your personal information and tax information as well. And how this tax works at the end, let me explain it to you, because it's gonna be simplified, I promise you that. So first of all, what we need to understand, the tax year is not just like a normal year. It's not from January to December. Like 2024 started in January, gonna end in December. Tax year starts from the 6th of April. You can see this one right here, 6th of April 2024, and it's gonna end on 5th of April 2025. So this is tax year 2024 and 2025. This is it, the first term that you have to understand, that the money that we're gonna make between this time, we're gonna have to report that, and we're gonna have to pay the tax on the financial year. It is not from January to December. And how the tax works at the end of the day, it really depends on if you're a sole trader or if you are a limited company. I'm gonna tell you how the tax works for both of them, and at the end it's gonna be clear what will be the best option for you. So first of all, let's cover when it comes to being a sole trader. So the first option is being a sole trader, which means being just a one-man army. So you probably already have a national insurance number, and you might be working somewhere already. Before you get paid, you receive a pay slip. Like the company who you work for, they send you a pay slip, and on a pay slip, your income tax and national insurance number is already deducted. They already have taken out probably pension as well if you contribute in a pension. So they already take that out, and rest of the money they transfer into your account. It doesn't work like that once you are self-employed. So if you're self-employed, you will have to get a UTR number. It's called Unique Tax Reference Number. So you can go on HMRC website and you can register for self-assessment. What you have to do, let's say I'm recording this video in August 2024. If I start the business in August 2024, then obviously I will have to register now. Now you have to register before 5th of October. It is always in October. So, but let's say I start a business after October, then I will have a bit of time to register for next year as well. So this is the deadline if you will start working in 2024 and 2025, like financial year 2024 and 2025. The UTR number is a unique tax reference number. And once you get that, you have told HMRC that you are self-employed. Like, eBay, Amazon, driving, Uber, everything is under self-employment. You don't pay tax like your job. You don't get a pay slip. It's you are the one who have to report that at the end of the financial year. Again, financial year, let's say from 6th of April 2024 to 5th of April 2025, any money that you're gonna make between this, you're gonna have to pay the tax on this one after 5th of April. You have the date to report that. So let's say you have you've been working in between this time and after April, you have until January 2026, right? Does that make sense? So you are working between this time. When this time is over, obviously you're gonna be in May 2025. So you have until January 2026. This is when the HMRC deadline is most of the time. You will have to report that income and you're gonna have to pay the tax on that one. How much tax you're gonna have to pay? This is a great question. It is almost similar to what you pay once you're working somewhere, but it depends on how much income you're gonna make in total at the end of the day. So this is something, these are our tax bands, right? So anything that you're gonna make between 12,570, you're gonna have to pay 0% tax on this one. The basic rate, 20% tax, and that is from 12,571 to 50,270. These are all the figures can be found on HMRC website. I'm gonna put the link for them inside the description because this is something that always changes. Hopefully it will not change anytime soon, but it does changes a lot. So let's go and let me give you a practical example. You know what I mean? Let's say in financial year 2024-2025, you will make 20,000 pound, for example, right? And out of that 20,000 pound, 5,000 are your expenses. So if I open calculator right here, so we have 20,000 pound in terms of sales, and out of that, obviously, let's say 6,000 pound is our stock cost, right? Postage, stock, all the expenses, everything. Now we are left with 14,000 pound profit. Out of 14,000 pound, we're gonna minus 12,570 because this is our tax-free allowance. So we're gonna have to pay the tax on only 1,430 pound. We're gonna pay around 20% income tax because it is between this bracket right here, this one, 12,571 to 50,270. So if we have profit of 14,000, then we're gonna have to pay the tax on 1,430 pound because this is something which is over our personal income tax allowance as well. You're gonna pay 20% income tax and around 9% national insurance number on this one. This is only self-employment, the income from self-employment. But let's say you are working somewhere else as well, then both of the income gonna get combined at the end of the day. And then you're gonna have to see in what bracket you're gonna fall in. Let's say your income from your job is 30,000 pound. And the profit that you have made is around, let's say 10,000 pound. So 30,000 pound plus 10,000 pound, you are still in a basic rate because you are below 50,270, so still it is a 20% income tax. The income tax on your income, which is your like a job income, is already paid. The income tax for your self-employment, you're going to have to pay separately. But if you combine both of them and it will go over, like let's say it goes in a higher rate, then you're going to have to pay 40% tax. So keep in mind, this is a marginal. It's not like then the 40% will be applied to the entire income that you're going to make. It only going to apply to the income which you're going to make over 50,270. £171 right here. So this is how it works once you are a sole trader. Keep in mind, sole trader is a one-man army. All the liabilities on you. It's not a separate entity like a limited company. Limited company gives you a little bit of more protection because it's a separate entity, but I'm going to explain in the second point. So let's talk about how the tax is going to work in the limited company as well. So to be honest with you, most of the time going for a limited company is a better option because first of all, it future-proof you. So future-proof in a sense, down the line, if you need to scale your business, you need to hire someone to run a payroll, all that kind of stuff as well. And you want your suppliers to take you seriously, then having a limited company is a better option. So the way the limited company work, limited companies are separate from yourself. You are a director of a limited company. So the way you're going to pay yourself, either you're going to take dividends or you're going to pay yourself a salary. A lot of people, they pay themselves a salary under the income tax, the threshold. So for example, they will pay them a salary from 12,570, and for rest of the income, if they need to take out from a limited company as a director, they're going to pay them a dividend as well. This is a more like sort of tax friendly option. So limited companies normally pay corporation tax, right? So the corporation tax, the rate for corporation tax is a little bit tricky to understand. It is 19% if your company profits are under 50,000, but if your profits are between 50,000 to 250,000, then it will be a marginal relief on this one, right? But if you are over 250,000, then you're gonna have to pay 25% definitely. So this is how the corporation tax works. Limited company normally don't pay like income tax, and they don't pay the what you call it national insurance number as well. Obviously, if you're gonna run a payroll and pay yourself, then you are the one who gonna be paying the income tax, and you are the one who gonna be paying the national insurance number, because that will be your personal income at the end of the day. So there is another tax which the threshold for this one have increased a little bit in financial year 2024 and 2025, and I'm very happy that changed as well. This is called VAT. So the VAT is a value-added tax. The value-added tax you will only pay once you will go over the threshold of 90,000 within 12 months. So VAT, keep in mind, it is applied on your sales. It's not applied on your profits. So if your sales will go over 90,000, or you expect to like HMRC have a little bit of guidelines right here as well. I'm gonna put the link for them inside the description. Let's say your first month you started a business and your sale is £10,000, right? You already know you're gonna go over VAT threshold, so you're gonna have to register that. But if you're not sure about it, you're sitting at 5,000 and okay, well, it's not going to go over 90,000, then you will be just fine. So the VAT, the threshold for this one is over £90,000. You're going to have to register a VAT once you will cross that threshold. If you are under that threshold, and that threshold, again, I said you're going to have to count it for 12-month period of time. A rolling 12-month. It's not like a financial year 2024, 2025. It can be any 12-month rolling. So if your sales, or you expect your sales to go over 90,000, you're going to have to get the registration for VAT as well. So this is how normally the VAT work. Keep in mind, a lot of people think that to buy from China or to probably buy from local suppliers or anything, we're going to have to register for a VAT because they are charging me VAT. So I'm going to have a VAT number. Or once I buy something from China, they're going to charge me import VAT, so I'm going to have a VAT number. That's not true. Keep in mind, every time when we buy something, let's say we go to Asda, Tesco, or to buy something from Zara, H&M, we are paying VAT as a consumer. So if I'm buying something from a supplier who is VAT registered, they are VAT registered because their sale is going over 90,000 already. So we as a consumer are going to have to pay them 20% VAT, but that doesn't mean we have to have a VAT number. It's not like we go to Asda or H&M or Zara, we take our VAT number with us, we go, we do the shopping as a consumer, they charge us a VAT because they are the business who are already over the VAT threshold. Same, anything when you buy from China, you're going to have to pay the import VAT anyway. That doesn't mean you are a VAT, you have to have a VAT number. So at the end, what I recommend is you get in touch with the accountant. Again, I'm not a qualified accountant. You're gonna have to take this a little bit more seriously. I'm gonna put the link for Osome inside the description. And thank you so much for watching this video. Again, I have my 0 to full-time eBay selling course. I explain step by step how to find a good products, good supplier. I have a great testimonials as well. I'm gonna put the link for that inside the description. Make sure you check that out.